Jensen Huang is in China. I'm not sure he's still in China or he came back. But what is he doing there? According to media reports, he's meeting with different folks in China and talking about the overall business situation in China. But is he doing something else there or there is some secret purpose of his visit? I don't know. You can write in the comment section. Moving back to Nvidia last few days or last few weeks, you can say, has been tremendous under pressure because of the trade situation and or the tariff situation. Year to date is still about 27% down. And last 1 year, oh, that's interesting. The returns is still positive, 27%. And last 5 days, Nvidia is still down about 6.7%. At this point, Nvidia is trading around 101. Do we think it's a good time to buy Nvidia because the earnings seasons for other high tech stocks are coming? I will evaluate and try to answer this question during our technical charts discussion in a few minutes. Moving on to the earnings date for different companies. As you can see on your screen in this table, I listed down those companies that I closely follow and their earnings date. So the very first one is coming is Tesla. That's gonna be sometime this week. And after that is Meta, Microsoft, Amazon, Palantir, AMD, SMCI, Nvidia, and Dell. So Tesla during the earnings call can give some hints how things are going, and their projections for next few quarters would tell how Tesla is thinking or evaluating the impact of the tariff. And also Meta and Microsoft earnings that's going to be announced 10 days from now would also be interesting and would give us some hint what these guys are thinking about next few quarters, and that would give some understanding how Nvidia should perform before its earnings, that is on 28th May. Now let's take a look some technical charts for Nvidia. Nvidia, as I said, is trading around 101. If you look at the Fibonacci levels, the next support level, according to Fibonacci 23% retracement, is 100.34. In this Fibonacci level, I selected last 180 days and hourly chart. In last 180 days, the highest point Nvidia touched was 153 and the lowest point Nvidia touched was 84. So after 100.34, the next level of support is 84.04. That's a minimum point that Nvidia touched probably in last few weeks. I'm not expecting Nvidia to go below 84 before the next earnings. For those people who buy Nvidia stocks for investment purposes, for them it should not much matter how Nvidia goes up or down on daily basis. So they can buy Nvidia at this level. So they can buy Nvidia at this level and keep it for some time. Give it some time, probably about 3 to 4 months. In next 3 to 4 months, Nvidia should be back to 120 level. That's what I'm thinking. Because by that time, I guess most of this tariff negotiation with the big countries would have happened. For example, the European Union and also other big partners. I'm not sure about China, but I'm expecting the China tariff negotiation would also complete in next 90 days. And regarding my stocks on Nvidia, I'm still holding Nvidia stocks because if I sell at this point, then I'm not sure Nvidia would go further down or would go up, right? Then I would be in a difficult situation to buy the Nvidia stock again. Another reason is the volatility. Volatility, I don't think will go away anytime soon. So if any day you see 5 or 6% upside on Nvidia, do not think that Nvidia uptrend is back. And likewise, if you see 5 or 6% or more than that, Nvidia is down, do not think that Nvidia go back to 70 or 60 or 65 or something like that, right? So those are temporary ups and downs, and that would continue to happen until the negotiation between the US and other big trading partners is done. Now, let's take a look some news regarding Nvidia and overall market. Starting with the top one that says foreign stocks are beating the US market. Wow, I did not know that. Is this really happening? And this news is from balance.com, and they are suggesting to diversify the portfolio. Okay, so now another suggestion from balance.com that says retirees now not the time to buy the dip. Okay, I'm not retiree, I'm not buying. But to those folks who are watching this video, so this probably is for you guys. Let's take a look. So it says that S&P 500 has entered a correction territory, and investors may be wondering if it's a good time to scoop up shares that have gone on sale. For retirees, the answer is probably not. So single big reason they are quoting here is the stagflation. So they're trying to say the concerns about the stagflation, that the combination of stagnant growth and inflation have been mounting. So, so this means that market should go further down if their assessment is correct. So now scrolling down further, and this one is about Trump. That says Trump blast Powell, Nvidia tumbles on new export ban. Gold defies gravity this week in market. So that's probably little old news. We saw that on Thursday and Friday that Trump was not happy with Mr. Paul and he's suggesting Mr. Paul to cut the rates. So now this could be a debatable topic, right? Some of you might think that okay, the Fed should make decision on their own parameters, right? And the government should not intervene, and that's totally fine, right? But in this case, I am giving my own opinion. I could be wrong. You can share in the comment section what do you guys think. In my opinion, Mr. Powell sometimes is late to the game, right? Remember, in 2023, he kept saying that inflation is transitory, and he was reluctant to intervene at that time by increasing or decreasing the interest rate. But after a few months, he saw that he changed his point of view. He increased the interest rate by 75 basis point in just one time. And he kept doing that for next 2-3 cycle in 2023. So that tells that his initial assessment in 2023 was wrong. So he was late to the game at that time also. At this current situation, looks like he's also overly dependent on the historical data. And as you know, the inflation and the employment data that gets published every month, they are the lagging indicators. They are not leading indicators because they are based on the past data of the consumer, right? For example, if you have May inflation number in terms of CPI or PC index, the data they would use is 1 month prior. For example, and the April data that they collected would mostly depend on how the consumer were responding 1 month prior. So when they release the actual inflation in terms of CPI or the PC index in May, the input data is few months old, 1 or 2 months at least, right? So that's a lagging indicator. That's not a forward looking approach. So by the time, for example, June or July or something like that, if we see the inflation is going up in terms of CPI or the PC index, it doesn't mean that it went up in the month of June or July. But data is suggesting that. But in reality, the inflation is started going up 1 month or 2 months prior, right? And still he won't cut the rate because he would want consistent data that's showing the inflation is going up. For example, he would need another month or two of data that tells the inflation is going up. So by the time he gets 2 or 3 months of data in a row that says inflation is going up, he's already late to the game. So that's what I'm saying. And the situation could be reversed also. If the data shows the inflation going down, the June or July data, right, that would not mean that the inflation has gone down starting June or July. That would mean that in reality, the inflation started going down from April or May, right? And similar situation for the job market. The job market data suggesting few months from now up or down, and doesn't mean that it started happening from that month. In reality, it started happening few months prior, since its lagging indicator would suggest after a month or two. And based on that, Mr. Powell will take a decision. So by the time he takes a decision to increase or decrease the interest rate, he's already late to the game. That's my point. They should consider to change their metrics to incorporate the forward looking data as well in their analysis. So now moving on further to here, it says tax problems in China are getting worse. These companies are most at risk. Let's open it. So this is a big article. I'm not gonna read line by line. Let's go to the last para and see their conclusion. So in their point of view, that says that within big tech, the most insulated from China risk are Alphabet and Meta platforms. So services like Google Search and Facebook do not operate in China, though the two companies do get some revenue from Chinese companies advertising to customer across the globe. So in their point of view, out of multiple companies they discuss in this article, these two companies, Meta and Google, somewhat are insulated or less impacted in this kind of trade war between US and China. I'm not sure I agree with that, but you can write in the comment section what do you guys think. Scrolling down, okay, now this one looks interesting. That's a Xi Jinping's minister urges NVIDIA US firms to invest more in China during meeting with Jensen Huang, despite chip export curbs. So that's a good outcome of Mr. Jensen Huang visit to China. More things probably he would be working on while in China that we do not know at this point. So now that's a good thing. TSMC CEO is confident that the tariff turmoil is not going to impact much. So he says that no change in customer behavior despite NVIDIA H20 chips curves. Scrolling down, so here it talks about California. California is suing Trump over tariffs because already losing money. Okay, now some politics coming into the picture. So now some price targets. UBS maintains buy on Nvidia, lowers price target to 180. Argus cuts the price target to Nvidia to 150 from 175. Okay, so if I scroll down further, probably those are the old news, might not be as much relevant. So that's all about the recent news and analysis regarding NVIDIA. And also, that concludes my video for today. So, thanks for watching. I hope you liked the video. I will talk to you more in my next video. Take care.